Volatility rises ahead of election day. Welcome to Market Insight. I'm Elena Casas. Wall Street's fear gauge, the VIX index, is rising as traders anticipate that the name of the next president may not be known for days after tomorrow's vote, and the policy implications are even less clear. Last week, Treasury yields had been rising as the bond market priced in a Trump victory. But betting odds on Vice President Harris have improved after a poll at the weekend showed her winning in Iowa, and now the 10-year is moving lower. Well, to try and make sense of all that, I'm joined now by Tyler Ellegard, Portfolio Manager at Gradient Investments. Tyler, this swing in Treasury yields really highlights the uncertainty of the moment, doesn't it? What's happening in the bond market?
Yeah, look, as you mentioned, last week it started to price in a potential Trump win. And obviously with Trump's policies, we've seen a lot of talk about tariffs across all Chinese products, and even anybody manufacturing outside of the United States, which companies have historically been able to pass on those additional costs. But what we've seen since 2020, where they've had to increase costs so dramatically to the consumer that they're not sure that consumers can take it, which means we're going to start to see more inflation across the board, in turn, higher rates. So I think today we're seeing that reversal because, as you mentioned, Harris is starting to gain in the betting markets. Polls have always had them pretty neck and neck the last couple of weeks. So I think that is a good thing for the yields because we are also having a Fed meeting coming up in a couple of days too. So between the election and also the Fed meeting, I think we're going to get a clearer path, I think, going forward on Treasury rates.
You mentioned in your notes that it's sensible for investors to position for a divided government. Why?
Yeah, look, when there's a divided government, it means nothing gets done. And so that's what the market really likes. So, I think last week there was also the discussion of the potential red wave, which the market traditionally has not liked, and even a blue wave, which hasn't really been in question over the last couple of weeks. But even a blue wave, the market doesn't really like because obviously it allows the party that controls the government to push through any policies that they want to without any real pushback on it. And so it makes the companies have to adjust to those policies rather quickly. And so if there's a split government, it just means nothing's going to get done.
Investors last week piled into Trump-related stocks like Trump Media, but they are now unwinding some of those positions because of the betting odds changing, as we mentioned, and indeed some investors are now shorting Trump Media. Do you think we'll see more volatility in the wider market?
Absolutely. And I think if this election is not decisive after tomorrow, I think if the longer it drags out, the more volatility we're going to see. But from our view, we're still focused on the company fundamentals rather than trying to predict on who's going to win Congress, who's going to win the White House, because that's really what comes down to is how well are these companies growing. And so, we've seen 70% of the market report at this point. And so that's what we're trying to focus more on rather than making a specific bet on Trump or Harris winning the presidency.
If we see big swings in the next few days, though, how can investors position themselves safely?
Yeah, look, I think it all goes back to sticking to the plan. If you have a long-term focus on your financial future, I think that's really what's the most important. And then if you do want to play that game, there are products available out there or portfolios out there that can help protect some of your assets. So, if you are concerned, we try to separate politics and portfolios. That's just how we tell our clients. But I think the main focus here is just sticking to the overall financial plan and sticking to what your future goals are, because that's really what's going to lead you down the path. And the market over longer periods of time doesn't care who's in office and who's not.
Thanks so much for joining us, Tyler Ellegard of Gradient Investments. And that's Market Insight. Don't forget, you can watch more videos on Reuters.com.